There is something happening right now, this very second, in homes all across America that almost no senior is fully aware of. Every single year, millions of American homeowners over the age of 65 are paying 7 separate hidden property tax charges on the same house. Not 1, not 2, not even 3. 7 distinct charges. And for each of those 7 charges, there are specific ironclad exemption programs, tax freezes, deferrals, and statutory reductions written directly into your state and local laws. These laws were created specifically to help seniors keep their own hard-earned money. According to the AARP, more than 9 million American seniors are legally eligible for significant property tax relief in their state. And yet, only about 8% of those eligible seniors actually apply. That means 92% of the people who qualify just keep paying year after year, often without ever knowing that the relief even existed. I want you to take a breath for a moment and let that number sink in. 92%. Out of every 100 American seniors who could be saving money on their property tax bill, 92 of them are still paying full price. Not because they did something wrong, not because they failed to sign a form, but simply because nobody told them. The county does not call you. The state does not mail you a personal letter explaining your rights. The bill simply arrives in your mailbox year after year, and the senior pays it. Thousands of dollars quietly leaving your bank account every 12 months that may have never legally needed to leave at all. By the end of this video, you will know exactly what those 7 property tax charges are, what specific exemptions exist for each one, who qualifies, and, most importantly, how to find out if you, your spouse, or your parents could be saving thousands of dollars per year for the rest of your lives. So, before we go any further, if you, your spouse, or a parent is over 62 or 65 and owns a home in the United States, please stay with me until the very end. This information could quietly save your family thousands of dollars this year and every single year for the rest of your life. You're watching Retirement Watch, where we explain Social Security, Medicare, taxes, and retirement rules in plain, simple English so you can make informed decisions with confidence. I'm Robert Hale. If videos like this help you feel more prepared and more protected, please subscribe to this channel right now and turn on the bell. The reason this matters so much is simple. Property taxes are not one single tax. They are several different taxes bundled together on one bill. The average American homeowner has no idea how many separate charges are hiding inside that one envelope. And for each of those separate charges, there is often a separate exemption available. The county will not split them out for you. The relief programs will not show up automatically on your statement. The responsibility to look at each line item, ask the right questions, and apply falls entirely on you. We take complicated tax structures, break them apart, and show you exactly where the savings are hiding. Let's start with property tax charge number 1, the school district tax. For most, this is the single largest piece of the pie, sometimes 60% of the total. In Texas, for example, seniors receive an additional $60,000 exemption, and more importantly, the school tax is often frozen at the level paid the year you qualify. In New York, the Enhanced STAR program can save you thousands. The mistake? Assuming school taxes are mandatory and non-negotiable. Contact your assessor and ask, what senior exemptions are available specifically for the school district portion of my bill? Property tax charge number 2 is the county property tax. This is the second largest chunk. In states like Alabama or Illinois, seniors can receive significant reductions, but you must realize that the general homestead exemption is often a different program than the senior homestead exemption. Many seniors have one, but fail to apply for the second. Ask your assessor, Do I have both the basic homestead exemption and the additional senior exemption on my property? Charge number 3 is the city or municipal tax. Many cities have their own independent senior relief programs that the county does not automatically manage. In places like New York City or Chicago, these programs can reduce your assessed value by 50% or more. If you don't ask about municipal specifically, you may be missing out on a local program that the county assessor won't even mention. Charge number 4 is special assessments. This is the sneaky part of your bill. Sewer, water, fire district fees, mosquito control, library levies, they are all lumped in. These are often not technically taxes in the eyes of the law, but fees. And fees are much easier to get waived or discounted for seniors. Call the utility districts directly. Ask, do you offer a senior discount for residents over 65? Charge number 5 relates to home improvement reassessments. Did you add a deck, a walk-in shower, a new roof? Often the county reassesses your value based on those improvements, raising your taxes. However, many states have accessibility exemptions where home improvements made for medical reasons, like ramps or wider doors, cannot be used to raise your tax assessment. Don't let your comfort lead to a tax penalty. Charge number 6 is the annual silent killer increase. Property values rise, and your bill rises with them. This is how seniors get priced out of their own homes. This is why senior tax freezes exist. Once you apply, your assessed value or your actual tax bill is locked. It stops the clock. But you have to apply. In some states, if you miss the window to file for the freeze, you lose the protection for that year. Finally, charge number 7. Transfer taxes and reassessment. This is the one that destroys family wealth. When you pass a home to your children, many states will immediately reassess that home at current market value. If you bought for $60,000 and it's now worth $400,000, your children's tax bill could jump 5 or 10 times. You need to know how to structure this transfer or use family transfer exemptions to protect your heirs from a massive tax bill they weren't prepared for. To bring this together, do this week. First, get the itemized bill. Don't just look at the total due. Ask for the line item breakdown. Second, ask the 7 questions. Third, confirm your exemptions. Call your assessor and ask if there are any programs you are not currently enrolled in. Fourth, check for double dipping to ensure you have both the standard and senior exemptions. Fifth, plan for improvements by calling before you renovate. Sixth, plan for the future. If you intend to pass your home to children, consult with an estate planner about property tax reassessment laws. Seventh, share the knowledge. Send this video to your family. You have now moved from the 92% who pay full price to the 8% who are taking control of their financial destiny. You are doing the hard work that keeps you in your home, on your terms. This is not about loopholes. These are rights written into the law specifically for you. Don't leave your money on the table. Take charge of your property tax bill today. I'm Robert Hale, and this has been Retirement Watch. Which of these 7 charges shocked you the most? Let me know in the comments below. Take care of yourself, take care of your family, and I will see you in the next video.